everyone, I'm Kunal Sodhani, a part of Shinhan Bank, Treasury Global Trading Center. And we welcome you once again, to understand the global factors, how they are impacting the different currency pairs. Quite a strange times. We have war on the other end, and we have a very narrow range on the dollar rupee, not that usual. So first we talk about the domestic factors. If we talk about the FPI flows, we are seeing around a negative 11,000 crores of outflows for the month of October. If we move ahead to an important outlier which will be there on 23rd of October will be the maturity of the swap which RBI had. So there was a swap which was conducted on 28th of April 2022, which was a sell by swap which was done by RBI, and now because it is maturing on 23rd of October, a lot of banks have started anticipating a closure of that on maturity, and thus they started doing buy sell swaps, which in turn reduced the overnight levels, which created indirectly a shortage of dollars which was anticipated, which is already there in the system, and thus after that the lower premiums, which is the forward premium, also went left. So all in all, this is an important event to watch out. Though we are not expecting any kind of rollover, we are expecting it to be squared off because the swap was for a specific purpose. On the other hand, if we talk about the FPI flows for the month of August, we have seen a negative $2.8 billion of outflow. When we talk about the FDI flow. If we talk about the FDI flow for the entire quarter, April to June, we have seen around a positive 2.8 billion or $2.9 billion to be precise, vis-a-vis as compared to the same period last year, which was around $18.03 billion. So obviously the flows are also shrinking up when it comes to FDI. FPI was definitely a saver because overall, if we talk about the FPI inflows in the country as compared to last year, it is almost double. So that is a benefit to us, which is obviously a saving grace to us. On the global front, if we talk about the 10-year US Treasury yields, I have almost approached 5%. That was, if we talk about the Fed speech, Powell and the other speakers, there is a lot of split, but still somewhere the inflationary concern prevails. And at least we are not eyeing any kind of rate cut in the next 6 to 8 months. And some kind of hawkish statements are still continuing to proceed, which is just pushing the yields higher. On dollar index, if we talk about 107.20 is acting as a strong resistance, though it is considerably consolidating around 106 half at this point in time. But Brent crude prices on the other hand, when you talk about rupee, remains an important point to watch out. Because again, after making a low of $83 per barrel, it has strongly bounced back towards $93 per barrel, considering the escalation in the Middle East and the Israel war, which pushed the oil prices higher. So the next resistance for oil could be around $97 to $98 per barrel, from where it reversed towards $83 per barrel. And dollar CNH pair is also seen consolidating around 7.3, 7.32. So taking all into cues when you talk about yields and DXY and the other currencies have been faring. For dollar rupee, we last couple of sessions or maybe weeks, we have been in a very thin range of maybe 83.15 to 83.30. That's a broader range which we have been seeing. But it's very peculiar when we talk about rupee, the more narrower it trades, the more lethal it turns. So one needs to be cautious, because if there is a break of 83.30 on a closing basis, we can target levels of 83.5, 83.60. While on the lower basis, if we talk about as a support zone, 83.05 acts as an important support to watch out. In case if we close below that, this consolidation may take some more time, but if not, then a break of 83.30 can be on cards. So that's all from my side, friends. Wish you a very good week of trading as well as investing. Thank you so much.